Digital Currency Group CEO Barry Silbert seemingly distancing DCG from its lending firm Genesis Capital, saying DCG loans from Genesis, quote, were always structured on an arm's length basis. Nevertheless, crypto exchange Gemini escalating pressure, accusing Genesis and DCG of lies and accounting fraud, severing its master loan agreement with Genesis, and demanding a fair resolutions with creditors, and that Silbert stepped down as CEO. DCG is the parent company of Genesis and CoinDesk. Joining us now with more is Ram Ahluwalia. He's the CEO and co-founder of wealth advisor Lumida. Ram, great to have you on the show. So you've certainly been tweeting up a storm on this DCG, Gemini, Genesis business. You tweeted yesterday, quote, there are still open questions despite the revelations from Cameron and Barry today. The letters both require a precise, careful read. Here are the open questions to get to clarity. Maybe you can go over your thoughts on the letters and some of those questions that remain unanswered.
Sure. First off, thank you for having me. It's an excellent opening summary. So Cameron's letter in a 4.5-page statement leads with an accusation of fraud. It's an escalation from the prior week where he's intimating at improper behavior. So he's escalated, and of course he's called for the ouster of Barry. I found it was interesting that he did not elaborate on these allegations of commingled funds, which of course are very serious. It's the same type of issue that FTX is embroiled in. And there are a number of questions, I think, around Cameron's letter, but clearly it was a very aggressive letter, and it indicates there's not likely a settlement or out-of-court workout in sight. So that's Cameron's letter. On Barry's letter, for the first time in several weeks, he is coming out into the open and providing a tremendous amount of clarity we haven't seen before. He did remind the industry of his own humanity. It struck a sentimental tone at the beginning. He reminded the industry of his leadership and his tenacity. He also provided clarity on historical loan arrangements between DCG and Genesis. And there are interest rates. They do appear to have market terms around them. So that was helpful. But there's still other open questions. For example, this $1.1 billion promissory note on the Genesis balance sheet, why is it represented as a current asset if it is a 10-year loan? And the reason why creditors ask these questions are because creditors were financing Genesis on the representation of solvency. In other words, that Genesis had more assets than its liabilities. That representation is codified in the loan agreement. So that wasn't addressed explicitly. I think your leading statement was correct, that Barry is distancing himself from Genesis. He has separate advisors, separate lawyers, as does Genesis. And what we haven't seen is a statement from Genesis. Genesis is negotiating with the creditors. Genesis is under the spotlight. And Barry is saying, look, I injected $340 million in equity. I sought the appropriate counsel, and I don't make decisions for Genesis.
I also want to point out that some people are making comparisons online between FTX and DCG and Alameda and Genesis here, but there was a big difference. I mean, with FTX at least, there were terms saying your funds would not be transferred over. In the terms of Genesis, you were buying into a lending product, at least if you were with Gemini Earn and the Genesis partnership with Gemini Earn. And so you were accountable for potentially losing and profiting from your investments therein. And nevertheless, you have Barry Silbert, as you say, distancing himself from the whole Genesis entity, even though DCG is the parent company of Genesis. And you have the Winklevoss making very, very onerous allegations here. And so I guess, what is the accusation? And maybe you could walk our audience through this, because it can get a little jumbled.
Yes, and first off, look, there's a night and day difference between FTX and Genesis. There's no question. FTX is an out-and-out, multi-layered fraud. There are allegations and investigations that are ongoing. It's a night and day difference. So the claims that Cameron are making are, first, is that there's a misrepresentation. They've got this 10-year promissory note that's treated as a current asset. And the insinuation is that treatment was done so that Genesis could stand up to its representation of solvency. Because if Genesis took in customer deposits when in fact it was insolvent, it would have been violating contract law. So that's the first allegation, a claim of misrepresentation. The other allegations are around, again, violations of the solvency clause. So the Winklevoss point out that the present value of the assets on the Genesis balance sheet are less than the present value of the liabilities. Right? In other words, if you take a $1 billion loan due in 10 years, the present value of that loan today is going to be around $300 million depending on your interest rate. And that's far less than the liabilities of Genesis. So isn't that another indicia of insolvency? I think the most sharp claim that Cameron makes is an allegation of commingled funds. I haven't seen that, to be clear. That's a very sharp claim. That claim is that DCG or Genesis are using customer funds improperly without documentation in violation of the terms and commitments to customers. And in the follow-up letter today, there was no supporting data around that.
Rob, let's step back even further and just kind of let's walk through exactly how this all began. What is the exact? I understand this whole idea of saying, okay, that there are things on the balance sheet that shouldn't be there, but let's step back. What is the ultimate accusation? Is the accusation really that Genesis loaned money to DCG effectively, and that's essentially what they're upset about? What exactly, walk through this from, like, talk to me like the donkey that I am. Talk to me like somebody who has no idea what's happening.
Yeah, right. So let's zoom out at the highest level here, right? So, and Barry lays this out in his letter, I think, nicely. In November 2021, its peak bull, DCG is valued at $10 billion. And DCG, of course, was buying GBTC, the security issued by Grayscale, and it had loans from its subsidiary, Genesis. Those spreads widened. 3 Arrows Capital was doing the same trade. 3 Arrows Capital blew up. Genesis, subsidiary of DCG, had a $2.6 billion loan to 3 Arrows Capital. And DCG, and this is where the controversy begins, right? So in Barry's telling of the story, DCG injected $340 million in equity. That's a new revelation from his letter yesterday. It's one. Second, they, quote, assumed certain liabilities from Genesis. In other words, they were saying, hey, look, Genesis, we're going to eat this loss for you. And there was a promissory note that's an obligation for DCG to pay Genesis $1 billion in 10 years. And what that does is, on Genesis's balance sheet, it replaces this bad asset, this bad defaulted loan to 3 Arrows Capital with a face value of $1.1 billion. It replaces that loan with a good loan to DCG. So it is an attempt to restore the solvency of Genesis. Now, fast forward a few months, of course, Genesis has suspended withdrawals, and there's scrutiny on those intracompany transactions. Were they arm's length? And the allegation that Cameron is making is that in his telling of the story, what DCG was doing was self-dealing. The term he uses is enrichment. He used the term kamikaze grayscale NAV trades. That's a quote from his letter. And what he's saying is that DCG was using retail depositor funds to advance its own economic interest at the expense of depositors, and furthermore, that Genesis violated their reps and warranties, their commitments to the creditors, meaning that they stand up to solvency.
So one question here. I mean, we're sort of, obviously this is kind of a back and forth, but Cameron seems to be going at this like with a lot more vitriol, right? Is there anything that Gemini could have done different? I mean, is there the argument that could be made there that they're sort of like, they messed up somewhere and so they're going on the attack? I mean, I'm just wondering if that's even potentially part of this narrative.
Yeah, it's a great question. Like, clearly, there's a court of public opinion debate going on here, right? So in the first sentence of Cameron's letter, first thing he does is he aligns himself with the 340,000 Gemini earned creditors. And then in that very first sentence, to talk about high impact, it is to the accusation of fraud. So they're drawing battle lines, they're drawing grounds, and they're saying, we're here and you're there and we're with Gemini Earn. Now, to your question, are there things Gemini could have done differently? Of course, and as could Celsius and BlockFi. First off would be never to even engage in this program. I've no doubt, I don't have this on firsthand, but it's common sense, I've no doubt, if they could go back in time, they would never have even proffered this arrangement. What could they have done differently? Here's what could have been done differently. First off, there could have been more disclosure to Gemini Earn clients. So when you invest in a risky investment, you generally have a disclosure of risk factors. That's per securities laws. When you invest in a private company, you have a private placement memorandum. Even when you invest in a public company, and you look at the S1 filings or the 10K filings, there are 20 to 50 pages of thick risk factor disclosures. What was disclosed in the loan agreement is that Genesis is the counterparty, but there's no disclosure as to the financial health of Genesis, even the nature of their business model, how they underwrite their credits, their capitalization, and so forth. The other thing Gemini could have done better would have been to limit the offering to qualified investors, such as accredited investors or qualified institutions, as opposed to retail investors. I think there's one thing they could have really improved upon would have been not offering this to retail investors. That's when you get regulator focus and attention.